So it's a long process, and I think we're in the end game. I think things are starting to happen to a much greater degree and much more quickly than they ever have before.
Special coverage of the New Orleans Investment Conference is brought to you by Victoria Gold, leading Yukon's new gold rush.
Welcome back to SF Live on Site. We're at the New Orleans Investment Conference. I'm joined by none other than Brien Lundin, organizer of the conference, CEO of Jefferson Financial, publisher of the Gold newsletter, the man of the conference.
There you go.
And it's great that you could make some time to come join us here at the booth and sit down for a few minutes and catch up with us. So.
Yeah, very, very glad to be here. As you can see, it's very exciting, great attendance, which is encouraging to see in these down markets because we're so much of a precious metals and mining stock conference, even though we cover macroeconomics, geopolitics, all the asset classes. You know, our heritage is in gold and silver, precious metals, and sound money. But most of the conferences, as you know, attendance has been down because it's been such a down year, but this is one of our biggest years in many years. You know, a lot of excitement.
Yeah, the ballroom was full. It's fantastic. I've seen that. You get some exceptional speakers. Makes my job very easy to interview your guests. Really easy to pick.
Yeah.
So fantastic. That makes it, you know, a fun and entertaining conference. Good timing as well.
Yeah.
News-wise, because we had CPI print come out this morning.
Yeah.
So lots of talking about. I'm sure that some of the panelists will pick up on that as well.
Yeah.
Came in higher than expected, 8.2% instead of
Yeah.
8.1. I really love what you talked about yesterday. You talked about the debt repayments.
Right.
That's something I haven't heard of too much in the mainstream media. It's all about, okay, debt is climbing, but nobody talks about what it actually costs to have the debt on the books. Let's dive into that. And I think we touched on that on a previous conversation, but who owns the US debt? And how much is it actually? Like how much do you have to repay?
Well, the 80% that's owned by the public is spread, obviously, around the world. Anything from China to hedge funds to everyday investors, et cetera. But the key differentiator that people talk about is debt owned by the public and gross federal debt. The difference being the debt held by the GSEs, the government-sponsored entities. And the implication when people kind of downsize the debt by saying, well, let's only talk about debt owned by the public, which is about 25 trillion. The difference is that 6 trillion that's owned by government-sponsored entities. The implication is that we owe it to ourselves, so it doesn't really matter. We could always forgive that debt. But in actuality, that debt is owned by primarily Social Security, welfare, all of the entitlements, but primarily Social Security. So out of all of the debt that the government owns, out of all the Treasury debt, there's an argument that that's the portion of that could never be forgiven or defaulted upon because we've made that promise to every American citizen. But there is an inflection point coming up, and I think very shortly, in that the federal debt, the cost of servicing the federal debt on an annual basis is at $648 billion, and that's only using Q2 numbers through Q2 of 2022. And we're about to get the Q3 numbers. The Q2 numbers only include the first 2 rate hikes, which was a 1/4 point and a 1/2 point, so a 3/4 point. The Q3 numbers are going to start to gauge the impact of those 3/4 point increases that the Fed has done at each recent meeting, so 3 of those. So dramatically higher interest rates on the Q3 numbers than before, and yet we're already at 648 billion. When those Q3 numbers come out at the end of this month, I think October 27th, we're going to see, I think, a shocking number. And you mentioned that you haven't seen much talked about in the mainstream media about this. I haven't seen anybody talk about it.
Yeah, it's like you tweeted the other day, and I was like, oh, that's refreshing. Like, because it was something new I haven't seen before.
Yeah,
right?
and it's just simple math. And I think we're going to get very close to $1 trillion or more in annual interest costs on the federal debt at these levels. And it's just simple math. It's undeniable, and it's very easy to project, as you saw in my presentation, but nobody's talking about it. And I think that's kind of a political barrier that the Fed is going to run into, that people are going to talk about why are we paying this debt, and actually talk about, from the more liberal end of the political spectrum, why are we paying this debt, why are we saddling our kids with such enormous interest payments, and why don't we just default on it? And that's very dangerous.
The question is, like,
thought.
how are you paying it as well? Like, it's like,
Yeah. Well,
like, how is it being paid? Like, how is that even possible to
This
just
is
service $1 trillion of debt?
Yeah, $1 trillion of interest on the debt that you already have. How are you going to pay for
Yeah.
it? You're going to borrow more money.
Yeah.
Now, you and I couldn't function like that. We'd be bankrupt in moments.
Well, nobody would lend me any more money if I would be
They'd
like, if
foreclose
I owed
on
$1 trillion
your
every
car,
year.
they'd be taking the furniture and the kids out of the house,
Yeah.
whatever to pay that. Now, governments have a little more leeway. A sovereign nation that issues the world's reserve currency has more leeway than even other countries. So it takes some time for these factors to really hit and for the crisis to really develop. But we have to realize this has been going on a long time. We've been deficit spending in the US since the 1960s. That's 60 some odd years of building ever larger debt. And the last 40 years of ever easier money policies by the central bank. So it's a long process, and I think we're in the end game. I think things are starting to happen to a much greater degree and much more quickly than they ever have before.
Well, we're here in the US, so you got midterm elections, November
Yeah.
8th. Is that a breaking or a pivotal moment as well? Like, it feels like a lot of
Nobody's
people are looking
talking
to
about
it.
that, yeah.
They're looking towards it because it seems like a lot of policies are geared towards keeping the incumbent sort of in office,
Yeah.
right? And do you see a breaking point after that? Do you see a trend, or like a policy change or shift?
Not much, because we've had effective gridlock. The Democrats have been able to force through some additional spending, but nothing like they were envisioning before. Thank goodness, because inflation would be much higher. I think the outcome that everybody is seeing from the midterm elections is that gridlock will become just that much more entrenched.
Yeah.
And we've had effective gridlock already. So economically, policy-wise, I don't think it's going to affect much. Obviously, politically, it's a lot more consequential. But from an economic standpoint, macroeconomics, I don't think it'll affect policy that much in gridlock, which is not really a bad thing.
Yeah. No, I was checking the FedWatch tool this morning real quick after the CPI announcement, and it shot up to 86% of a 75-point basis hike.
Yeah.
And that's going to take us to 4%.
Yeah.
Do you see that there's a limit there? Do you think Powell will make a comment in his note there, November 2nd, I think is the next meeting, 20 days from now, about it? And what the plans are moving forward? Because he's got it feels like, and we're coming back to the political discussion in the midterm elections, he needs to send a signal to the voters?
I don't think Powell will send a signal to the voters. I think he wants to be the next Volcker. Volcker is essentially his hero, and I think he would love to be known as the person who killed off inflation. I don't think he will be talking about the limits, but I think there is a limit. In my presentation, I talked about what the effective interest rate is in the federal debt. Simply dividing interest payments by the federal debt gets us what it really is, where the rubber meets the road. And if you look at that over time, it essentially is a smoothing of the 10-year yield. So if the 10-year yield is around 4%, we will be paying very quickly 3.5% to 4% in that range on the federal debt, because a lot of the paper is that the Fed issues is actually 10-year or shorter, which means in this case even higher rates. At 3.5% on a $31 trillion federal debt, we're talking well over $1 trillion. And again, I don't think Powell will mention it because he wants to focus on the rhetoric of fighting inflation, but that is, I think, a very real limit on what they can do.
Yeah, it reminds me of me looking up into space and not understanding what is going on. I look at the debt and the numbers and the zeros behind it.
Yeah.
I lose.
It's beyond comprehension, and yet when you get to these big round numbers, that's what captures the public's attention. And I think once we cross that $1 trillion threshold, people are going to start to realize that this is really crazy. And it is an effective limit.
Brien, you had a chance to catch up with pretty much everybody already. They checked in, you said hello, you were in the green room. What's one of the buzzwords you've picked up here at the conference?
Well, I think the mainstream buzzword of pivot is kind of translated over to this, because everything is driven by Fed policy. There aren't any counter-cyclical investments, anything. No other inverse relationships among asset classes. You know, you talk about 60-40, the classic portfolio mix, stocks and bonds, and none of that works anymore because everything is driven by central bank policy, everything is driven by Federal Reserve policy because the other central banks are taking their lead from the Fed. So in that kind of an environment, and it happened post-2008, it was existing somewhat before that, but especially post-2008, the markets are driven by whatever the daily implications are for Fed policy. Prices of every asset class is set in Wall Street, on Wall Street on a daily basis by traders, and their algorithm is very simple. Anything that implies tightening of policy, sell everything. Anything that implies loosening of policy, buy everything. And that's why gold is, despite a very high inflation number like we got today, gold gets sold off.
We're down 1.6% earlier today.
Yeah. And fully expected given the trends we've been seeing and the way the markets are trading, but still illogical. But those prices are set by the traders on Wall Street moving paper gold, which then set the price of the rest of the world. And as we know, physical metals are being scooped up hand over fist all across the world, not just in Asia where you see low prices, increased demand for gold and silver, but in the US you can't get physical supplies of metals right now. Or at least at any reasonable price.
Exactly. Premiums are on Silver Eagles are just crazy.
Yeah. You're talking, $10, $15 premiums on American Eagles.
Yeah.
It's crazy with the price around $19, $18, $19 an ounce.
Crazy. Brian, thank you so much. No, sorry. You record all the presentations here, obviously.
Yes.
And there's some fantastic speakers here. Can our viewers sort of watch them online? Is there a way to access them?
We sell the recordings, and they can actually, if the conference is over when they see this, it'll be too late, but we also have a virtual pass. But they can get the recordings and the transcripts, and they just have to go to neworleansconference.com.
Fantastic. Awesome. Brian, thanks so much for inviting me. Thanks for having me here.
Thank you, Kai. Always a pleasure.
Great booth here. Just everybody's walking past us here.
That's right. You can get great content just by grabbing people as they walk by.
Exactly.
That's another great benefit of these in-person events, and especially our event. You can mingle with the speakers, other attendees. Everybody's here having a good time and sharing
and we're
ideas.
in New Orleans. So.
Yeah, and you're in New Orleans. So.
Fantastic. Awesome. Brian, thank you so much.
Thank you,
and,
Kai.
Everybody else, thanks so much for tuning in. SF Live special coverage from the New Orleans Investment Conference. We were joined by the organizer, Brien Lundin, CEO of Jefferson Financial. And if you like this video and the production of it, hit the like and subscribe button. Leave a comment. We want to hear from you, and we thank you for your time. Thanks so much.